Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome once again, Art Jarvis. Taking Stock.
Hey, happy to be here, as always.
You know what? And happy to have you, and especially as we celebrate episode number 20 in Taking Stock. We're rolling.
Time flies when you're having fun.
Well, we had a good amount of fun 2 weeks ago, and so here we are again, recording episode number 20 on this. We're into March now, and not that we're going to take stock of the weather, but it's worrying me. It's worrying me because that old adage, right? In like a lamb, out like a lion, or in like a lion, out like a lamb. Here we are.
The good news is we live in Cincinnati, so don't bet on the weather in Cincinnati.
Anyway, we're off to a nice summer-like start to March. What kind of impact does the weather have on the economic world? Is it really, is there something that's ever been noticeable, patterns that happen?
Oh, most certainly. Let's see, and this is something you're actually probably pretty familiar with. Let's go to the extreme when you talk about a disaster like a hurricane or a tornado or something like that. And obviously that has a huge impact on the local economies and things like that. It has a huge impact on insurance companies and things like that. So yeah, it's definitely weather can have a huge impact. And if you start talking about weather changes in certain locales where how do you put it? Certain businesses may thrive there, and maybe if conditions change where that business might not thrive there, you have that going on too. So yeah, weather has a huge impact. Weather. There's boats and ships out in the water that are impacted by the seas and things like that. So you have that. So yeah, some of them could be small impacts, or you can have a hurricane that put you into tens of billions of dollars. So.
Well, and certainly, as you go through it, it does bring to mind. There's no question. Weather impacts the economy, especially, as you said, the extremes when you're talking tornadoes or floods or hurricanes or whatever kinds of weather events occur that obviously impact that economy, whatever it is, that local economy is impacted a big way. And then on the larger scale, nationwide, or globally, wherever these things occur, insurance companies, and that's those are corporations, and that hits the money markets, changes the bottom line.
Exactly. You're talking about snowstorms, so you're talking about over the road truckers and things like that. That slows down the movement of goods. Flooding, so a whole lot of rain, rivers flood and things like that. That slows down the ability to move goods up and down the waterways, and so which can add to time, which can add to cost, which can add to the bottom line or add to how much we pay, and all those good things. Look, and this isn't necessarily weather related, but just look at there's been a couple of incidents in the Suez Canal,
right,
where a ship is
the pirates, so to speak.
Yeah, the pirates, and then somehow they ran a ship aground and blocked the whole thing, and that messed things up for a couple weeks, if I remember correctly. You've got what's going on in the Red Sea right now, so you have shipping companies that are completely avoiding that area, and they're going all the way down the Cape Horn or
the long way around.
The long way around. So, weather does have an impact.
See, people have no idea. You have to listen, and you are listening. Whoever you are right now, you are listening. So if you're hearing me, you never know where we're going to go on taking stock. We truly take stock of what's happening with the economy, but the things that impact the economy, as we're talking about now. I told you, when we were kind of offline talking a little bit, that I was going to throw a question at you because we've talked a lot about, the inflation numbers, the interest rates, whether a recession was happening, what defines a recession. We've talked a lot about that keyword recession. So I was going to throw this question at you. in the past few days, I heard some other, not Art Jarvis on Taking Stock with Chuck Gibson, as you're listening to now, and as we're talking now, but somebody else, somewhere else, who's supposed to know something, and his response is, we're absolutely going to have a recession. And, as you said right when I brought that up to you offline, it was like, well, what's his timetable? Well, he was talking about in 2024.
Okay. All right.
So what do you say? Let's rehash a little bit about where the numbers are, and that's what guides you in your planning and helping with your clients and in the investment world and what's going on in the economy.
Yeah, sure. And again, I think that's, I wouldn't argue, we've had several recessions in my 37-year career, right? We've had some itty-bitty tiny, barely noticed it, and we've had the Great Recession of 2008, so in which, the market dropped 55% in 15 months. So that one was definitely noticeable. But, I guess I would start with, I completely disagree that there's going to be a recession in 2024. Something in my mind, the trends don't support that at the moment.
Yeah.
Recently we had the gross domestic product number. They were looking for it to be, for the economy to be up 2.2%, and it was actually up 3.3%, which is not only a big positive surprise, but it's just a nice number, period. If the economies are growing at 3%, there's some good things happening. So, the inflation numbers have been, if the one that, we've had a couple since the last time we talked. The CPI number came out, and they were looking for 2.9, I think, on a year-over-year basis, and it came in at 3.2. So everybody's upset, right? Well,
and folks, that's Consumer Price Index. I was going to say computer.
Yeah.
Consumer Price Index is the CPI, and then as you talked about, we were talking about the GDP and things like that as well. But so the Consumer Price Index is looking favorable.
Oh, very much, and again, we've talked many times. I want the trend. So the point is okay. I'm sorry we didn't get 2.9, but if we're at 3.2, that works for me. Okay, that we went from 3.4 to 3.2. That inflation, if you're looking at the trend, and it's been a trend for several months now, that inflation number continues to come down. More recently, the one that the Federal Reserve looks at, which is the Personal Consumption Expenditure Price Index, so the PCE is what they call it. That's the one that the Fed looks at, and that came in at 2.4%. So the Fed is supposedly trying to shoot for a 2% inflation rate. Well, that number, that PCE number, that personal consumption expenditure number, 1 year ago was at 5.4. So in 12 months, we've gone from 5.4% inflation down to 2.4% inflation. So in any analysis, that's a good number, right? So
sure.
So if we're talking about recession, and you always got to look at the consumer, because the consumer is 70% of the gross domestic product, 70% of the economy. The consumer is still in it to win it, right? So there are, at this moment in time, I would say there are not signs that the consumer is going to slow down, or the inflation numbers are going to pop up, or the economy is going to slow down. Now, that doesn't mean between now and December it can't slow down some, but the definition of a recession is 2 quarters in a row of a declining economy. So now that could be, the third quarter's down 0.1 and the fourth quarter's down 0.1. Technically, that's the definition of a recession. Okay, so unless something, in my mind, unless something changes drastically here in the next few months, I just don't see a recession in 2024. And that's been the problem. 2021, there's going to be a recession. 2022, there's going to be a recession. 2023, there's going to be a recession. Finally, they finally skipped over that. You're mentioning that's really the first time I've kind of heard about the talk about a recession in 2024. They've already pushed it out to 2025 that there's going to be a recession.
Yeah.
They just keep kicking the can down the road. Well, we'll see it coming. I mean, it's not magic. You'll see it unless you have a global pandemic where someone walks in and just completely shuts off the world economy. you'll see it coming.
Yeah.
So.
Well, sometimes, Art, when we're recording these taking stocks, sometimes I feel like, not on you, but I'll tend to talk about some of the things that, are the negative aspects that the rest of the world is talking about, or that the media is spewing out there about our economy or about in the investment world. And what, to share with listeners, Art, you keep a very positive outlook, but it's not, you're not making that up. You're guided by the numbers, which you tell us, every other week. You get an opportunity to remind me that, it's the numbers. The thing that's interesting to me, and I learn every time we do a show, I've told you before, my wife, Sue, should be sitting here because she knows this stuff. She pays closer attention to it. She might ask you some tougher questions. But for me, it's great because I get to learn what, some of these things about what the economy is and what investing is.
Hopefully that's true for all of our listeners, too.
Yeah, I hope. But so what's interesting to me and part of this learning, and again, you just brought up that, the personal consumption price index, or, which PCE, whatever it is. There's alphabet soup, and I don't know what we want to call the numbers game, but man, there is a lot of the alphabet and a lot of the numbers. How much of a challenge is that for you when talking with your clients and helping them understand that these things that are guiding you to guide your clients, the investors, and understand what's happening in the economy? How much of a challenge is that for you to help them see and understand numbers and the alphabet soup that go with them?
And you have a whole array of clients. You have clients that are watching it on a daily basis,
right,
and you have clients that haven't looked at it in a year, right? They just don't. They don't do that. We are inundated with information now. There's people out there. I turn CNBC on and I turn the sound down because I don't want to hear it. Because during the day you're going to hear this opinion, and then you're going to hear the opinion all the way on the other side, but it's what the clients hear, and then you'll get a phone call saying, "Hey, I'm hearing things are markets getting ready to drop 20%." It's like, well, where'd you get that from? It's like somebody said it somewhere, or I read it somewhere, or something like that. So you have to deal with that, and I think that's there's a few pieces to this job. There's one is performance. We're trying to grow people's money. That's the goal. 2 is taking care of people. 2 is trying to make the right decision, trying to get them from A to B, and whatever their goals are, travel, retirement, education, things like that. So how do we get you from where you are today to where you want to be in the future? So there's a whole array of things we talk about, and it's just about taking care of people. Make sure we get the right information and get it in front of them. They can make the best decision they can. The other thing is completely lost my train of thought. And that was the important part, right? But anyway, you're talking about how's my the other thing is talking them off the ledge.
I got you.
Okay, so it's how do reminding them, and we've talked about this several times. Stick with the plan.
Right.
This is the plan. This is why this is the plan. And this is why we should not deviate from the plan at this time.
Well, and that's the fundamental part of the question that I just asked, is like, this is why. And so that's the challenge, because as probably the question comes back from them, and, maybe it's as simple as sometimes as going, remember when we sat down and asked all those questions, what are you trying to do? And we said, well, if that's what you're trying to do, here's how we do that, and here's why we do it this way. It's maybe, hopefully for you, and I guess if you've survived in this for 37 years, apparently it didn't drive you crazy and you ran screaming into the street or something. But
how crazy I am or am not, that might be another discussion. But, I like this bit. This puzzle, I said it. It's like a great big puzzle. And you're just trying, from an overall aggregate standpoint, trying to put the puzzle together, and from an individual client standpoint, you're trying to put the puzzle together for them. And some puzzles have more pieces than others, but you're just trying to do that. And we've talked, so if you go October 27th of last year of 2023, that's kind of not where the market bottomed, but it was kind of the bottom before we started taking off here in the last few months. If you look from October 27th of last year to today, the market's up 24%. Well, right before that October, we're having discussions about how the world's coming to an end, and how everything's bad and everything's negative, and even Chairman Powell, just before he came out, even he was talking about he's still going to drive the economy into a recession. But if you missed that, so what is that, 4 months? Let's just call it 4 months. If you missed that 4 months, you've missed a 24% move.
If you're talking November, December, January, February, because now we're into March, so those 4 months is where we've seen, or what has revealed itself as a 24% growth.
Yeah, and the market was up last year 20%, and the vast majority of that return happened from October 27th until December 31st. So, again, it's managing expectations, it's keeping people on task and keeping their eye on the ball. All right, and this is how I feel, this is what I'm going to do. No, this is why you don't want to do that. And these last 4 months have been the epitome of why you don't mess with the plan unless it's absolutely necessary.
Well, another thing that just struck me as interesting as we're sitting here talking right now, Art, is the fact, like you said, you'll turn on CNBC and turn off the sound because you don't want to hear it. Unfortunately, that is pervasive through the news, not just financial news. What happened to people seeing? Because here's what I'm going to put words in your mouth. I'm guessing the answer to the question, you turn it off. You turn off the sound. Well, why do you have it on? Well, because you can see. You can see. I mean, it's like watching the board if you were on the floor at the New York Stock Exchange. All the numbers are flying in front of you. You don't need somebody to tell you what they're saying.
Right.
You read them, you understand them, and you respond accordingly.
That's correct. From our standpoint, from Jarvis Global Investment standpoint, our research is 100% internal. We use the numbers, and over 37 years, I've decided what I believe is the right way to do things, and I stick to it. Well, I use those numbers that come out, and I plug those numbers into my spreadsheets every month, and I plug the earnings numbers, and I put in the interest rates and things like that, and that's how I make my decisions. I don't need this guy over here telling me the economy's about to go through the roof because of this, and then 5 minutes later, this guy tells me the economy's about to go into a recession because of this. Now, I will look up and let's say, whatever, the chief executive officer of NVIDIA is on there. I'll turn the volume up because I want to hear what the guy running the company has to say. I want to hear about that. I want to hear about trends. I want to hear about demographics and things like that. What I don't want is someone to tell me what the markets are about to do.
Well, and again, and as I said, this is pervasive through so-called journalism today, news. Instead of reporting the facts of a story or reporting the facts of the market or the facts of the U.S. economy or the facts of the global, whatever the case may be in the numbers world, the financial world, you turn off the guy that's giving, his opinion of what this all means and where it's going, but you turn on the guy who is, as you said, the CEO of Company A,
right.
And he's reporting facts about what's going on with that company, what they're going to do, or what results they just had, and he's not speculating.
Correct, exactly. He's the guy, the chief financial officer, the chief technology officer, chief operating officer. These are the guys who are in the trenches.
Yeah, I said CEO, and I should have said CFO.
You're right, CEO. I mean, he's supposed to be the gentleman or the young lady who is supposed to be directing the company. Right. So there was an interesting story, and I'll try and make this short, but back in the early 2000s, if you remember Enron.
Right.
Enron, and they were basically cooking the books.
Oops, yeah.
Which was devastating to thousands and thousands of employees because basically their retirements disappeared.
Right.
So we were on conference calls with, I'm going to forget, Andy Fastow, who I believe was the chief financial officer, and then the chief executive officer, whose name is escaping me at the moment.
That's okay.
But so we're on a conference call
with the
them.
main players.
These are the guys, and they just flat out lied to us. And it was because you're trying to make a decision. Here's Enron; it's dropping like a rock. What's going on? And it's impacting us. It's impacting our clients, and they're on there telling us it's basically all a lie. Everything's fine. Don't worry about it. We love Andy Fastow, who was the chief financial officer. We love Andy, and he's doing a great job. Well, we love Andy. On Tuesday, on Wednesday, Andy got fired right after we talked to him on the telephone. And so that is an example to me that you better know your numbers. Okay, you better know what's going on. But it's not a perfect world out there, and there are people who will maybe not necessarily do the right thing all the time. And you kind of, that's why you run a diversified portfolio. Yeah. Okay, so that was one company out of 30 or 40.
Yeah.
So.
Well, as we move into the final few minutes of episode number 20, I told everybody, sometimes I feel bad because some of the episodes we've talked about, the doom and gloom, of which I feel like I have force-fed to you because, Art Jarvis, I mean, right now, you need to see Art's eyes, bright, shiny, sparkly, and the smile on his face, with this positive outlook that I get to see when we sit down to record each of these and that I'm looking at right now. So in these final few minutes of episode number 20, what's got you happy and smiling about the economy? Like, what are the numbers this week? What have you seen, over the last 48 hours or whatever that, what's happening right now? Taking stock, what's happening right now?
And let's be clear about something. There is a Dr. Doom and Gloom, Art Jarvis, also, and I will, and it'll happen gradually. If we go through the years here, if we continue to do this, it will be it's like, hey, this number is kind of starting to do this, and this number is kind of starting to do that. Okay, now the trend is this. The trend, there will be, and I'll say to my clients, I hate to sound like Dr. Doom and Gloom, but here's the facts. So there is a negative side, but
to support that statement, and don't lose your thought, but to support that statement, we touched on the real estate and the mortgage thing. 5 months ago or whatever, and you were very, it wasn't bright-eyed and shiny and like you're trying to fool the people like, hey, it's all No, there was a reality of what was happening in the real estate market and the mortgage industry with the rate increases at the time. So
yeah, you're exactly right. And the thing to remember is, again, I've mentioned the positive. We still have great employment numbers, we still have great inflation numbers, we still have great economy, gross domestic product numbers. Those numbers still look good, and the trend still looks good. So that's the recent story. It's going to continue to be the story until things gradually change. The market, the economy, and it's a great big huge super tanker out in the middle of the ocean, and unless a global pandemic happens where they shut the world off, on March whatever that was, it takes time to turn that super tanker. We aren't running around on a little jet ski doing 180s. Okay, it takes time for things to happen. Okay, and unless there's a major event in the world that causes a drastic change, it takes time. So, and you can see that coming. It was true in 2008. Things didn't make sense. The numbers didn't make sense, and really from 2006 to 2008, it's kind of like, man, this isn't making sense, and something bad is brewing here. And it ended up being, really bad. If you lose half your money in 15 months, that causes you to make some new decisions, right? So the point is again, we sit down every 2 weeks and talk, right? Unless something drastic happens, it's going to be a subtle change over time as things actually start to go to the negative. Right. When people say we're going to have a recession, yes, we are. I can't tell you whether it's going to be 2025, 2026, 2027. Hopefully we'll start to see it when it comes, and we'll make adjustments. But so and
it's quarter, and then the definition for that, just to make my mind clear again. it's like back-to-back quarters, not
Correct.
back-to-back months.
Yeah, 2 quarters in a row. So, I mean, there's 6 months right there.
Right.
So it takes time. And then the interesting thing is then you'll say, okay, well, we were down this quarter and we were down this quarter, so technically we're in a recession. But it'll be another 6 months before the Board of Economics actually officially tells you that you were in a recession, and by that time you're already technically out of the recession. So
Well, I was going to say that that's an interesting twist on it too, because it's like bad quarter or down quarter. So by the end of the second quarter, when they get those numbers and they say, "Oh my gosh, we just went through a recession," we may well already be climbing again and out of the recession by the time somebody's telling us.
Exactly.
And that's the point I was getting to when we talk about Art Jarvis turning on CNBC but turning off the sound, because you can see the things, the numbers and whatever it is that you can see visually without listening to somebody speculate or try to tell you what it means. You're looking at the numbers and you know how to analyze those numbers and forecast and help your clients.
I think I do.
Well,
yeah, it's about being consistent, and it didn't happen overnight. I spent the first 5-10 years trying to decide what I believed. And you do some back testing and do some things, and I'm not right 100%. I tell my clients all the time, I will not be right 100% of the time. I will do what I believe is best for you 100% of the time, but I'm not going to be right every single time. But if I'm right most of the time, we end up in pretty good shape. So
that's perfect.
There we go.
Well, I think we just ended up in pretty good shape for episode number 20.
There we go, number 20.
I think we covered a lot more than I think we covered.
Right. It's always interesting to go back and listen to what was said and things like that. And it's the thing is we're meeting every 2 weeks, right?
Right.
So to try and come up with something new-ish to talk about, right? So again, I said the economy doesn't change in 2 weeks.
Well, I like to have fun, and and again, we messed around with Art's forecast for 2024, and that flies in the face of what we were just talking about. Don't do that.
Right.
Don't speculate. Let's report what's happening. Let's take stock of what's actually happening here on Taking Stock. So hopefully that's what we're doing. And I won't say, hey, we're 2 weeks away from the next show. What can we expect
That's right.
on March 12th? But not the 12th, the 19th or something, whatever it is.
Unless somebody does something really stupid in the world, don't expect a recession in the next 2 weeks.
Perfect. And on that note, we will close the show. So Art, thank you for joining us on Taking Stock.
My pleasure. I appreciate you. This is a good time. Hopefully it's good for the listeners, and it's definitely good for me to, kind of go through these things. So I appreciate you.
Yeah. And I want to say, Art, you and I both, and I know I speak for you fairly on this. Thank you for those out there listening to us for sharing this, 30 minutes with Taking Stock. And tell your friends and keep tuning in. We appreciate you.
Yeah, most definitely. Thank you.
Until next time, 2 weeks from now.
All right. Have a great day.
You too. Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.